Welcome back to the ICT or SMC beginners course. Today we are covering premium and discount. Now this is probably one of ICT's easiest concepts to grasp, especially if you properly understand market structure. So if you think you got a grasp on that, or you think you are learning that, you're in the right direction right now, then this is definitely the right video for you. But if you don't understand market structure yet, I suggest you go and look at that video first, or those two videos I should say, and then come back to this. But without further ado, we're going to go over what premium and discount actually is, as well as how and where we can use premium and discount in our analysis and trading so you can get stopped out less and get higher risk to reward trades. Okay, so what is premium and discount? And simply, premium and discount should be thought of as the ideal spots or locations for smart money to enter and exit trades. And we want to be trading on the same team or the same side as smart money. Now, I believe that price is controlled algorithmically, and these principles are actually coded into the algorithm. But if you don't believe in that, that doesn't matter. This is still going to work just fine for you. Essentially, what we're going to be looking to do is purchase in a discount or buy in a discount, and we're looking to sell our asset in a premium. So just like when you go to a store and you want to buy a computer, for example, on sale, you're going to want to buy a stock or an asset on sale or on discount as well. And if you do end up selling it later, wouldn't it be great if you could sell it for a higher price than what you purchased it for? That's all that stock trading is, and there's no different rules here than there is going to buy a car or a house or a new computer. You want to buy stuff for cheap and you want to sell it for more expensive, and so this is the theory behind premium and discount. However, like I said, I do believe it is coded, and this becomes very prominent when you look at it in the case or the lens of a trend. So that's what we're going to do right now. Alright, so taking a look at this diagram on the right here, I'm just going to remove this premium and discount line here, and we're going to imagine that we're on a trend here. So we're making higher highs and higher lows, and if you don't understand that yet, what I mean by that, make sure you go and check out my trends and market structure videos, both the bullish and the bearish one, because they will be beneficial to you. But essentially, you can see here we are making higher highs and higher lows, and realistically, we're looking at it in hindsight here because we want to catch this leg right here. This is where we're trying to get involved. So what we're going to be doing is we're going to be looking to continue this trend, and we're looking to get in long or take a buy position. So we're going to find the market structure low here, which is pretty prominent right now. And we're going to take a Fibonacci tool, which is what this is up here. You can also use a Gann box or anything that marks out 50% area. And we're just going to run this all the way up here to this high. So this high here becomes your market structure swing high. Not this one because there's no swing low before it, so this cannot be your market structure high. This one has to be your market structure high. And as you can see, this is a diagram, but price is going to come back down into a discount for you to go long or take a buy position. Now, not only that, but we do also have a fair value gap here. Now, I know I haven't covered fair value gaps in the beginner's course yet, and I promise you we will go over all of those PD arrays. And by the way, P and D stands for premium and discount, so this all does come full circle. But this PD array or premium and discount array is a fair value gap, and price bounces off of it and then continues higher. So what you could be doing is looking to take a long position in that fair value gap, targeting the highs, and then ultimately a higher time frame PD array, point of interest, or liquidity pool above, and you're going to have your stops maybe below this low, below the fair value gap candle, or even just below the fair value gap here, and you can get some pretty good risk to reward trades if you find the right PD arrays in the correct trends. So now that we kind of have an idea for what this bullish trend might look like and a bullish premium and discount example, let's go ahead and hop into the bearish example. Alright, so now let's take a look at the bearish case here. So taking a look at this downtrend here, you can see we're going to pretend once again that we're making lower lows and lower highs, and now we've come into this candlestick formation here, which is going to be a continuation model. We're still looking to get short here and trade with the trend because that's the safest way to trade. So what we're going to do is take our Fibonacci retracement tool, or you can use a Gann box, but I'm going to take this Fibonacci retracement tool because it's easier to see in my opinion, and we're going to go from this market structure high here, and we're going to go down to this market structure low. And we're just going to bring this across here so we can all be on the same page. This is your discount and this is your premium. And I forgot to mention this before, so I'm just going to clear it up. Anything above 50% or the 0.5 is considered premium, and anything below is considered discount. So if we are going to take our GAN box here, just to make it much more clear here, you can see that this is all our discount area and this is all of our premium area. Now I have adjusted the GAN box and my Fibonacci tools to make it look this way, so it's not going to look this way right out of the gate. But if you are interested, these are the settings that I have on. It's real easy, 0, 1, and 0.5, and then I have the background off. So if that's something you want to do, or you want to mess around with the GAN box as well, you can definitely do this here. Super easy to follow along with. I'm not going to keep it on there long. If you want, you can pause the video and take a look. But essentially, everything above 0.5 is premium, and everything below 0.5 is discount. So what can we do if we want to continue short and trade the trend after we see this market structure point put in here, or this swing low here? We're looking to continue with the trend and get short. So we're going to look to get short or sell above or inside of the 50% mark or the premium area. Now, what we can also see here, and like I said, we're not going to go over these PD arrays in this video, but this here is an order block. So this is where you would likely want to take your entry. So you could take your entry here, have your stops above the swing high here, and your target down here at the low, maybe lower, but we'll say here for now. Or you want it above the order block, which is this green candle here, maybe just a little bit above the mean threshold, which is the 50% mark of that order block. And as you can see, your risk to reward becomes better and better the tighter you take your play. Now, the tighter your play is, or your stop loss is, the more likely you are to lose. So your win rate will probably go down, but your risk to reward will go up. So the best way to alter that is, instead of taking your entry right here, you want to take your entry as deep into a premium if you want to short the market or sell. You want to take your entry as deep in a premium as you can, and you want to take your longs as deep in a discount as you can. So we're going to use this PD array and ultimately target lower prices. So I hope that's starting to make some sense now, and you can start to see how we can predict where we're likely to make our swing high or our new market structure low. And if that's not making a lot of sense, we're going to go into some live price action here so we can really start to drive this point home, and I promise you it's all going to come together shortly. Okay, so here we are on the 4-hour NASDAQ chart, and this is actually the same 4-hour chart that we were looking at in our bearish market structure example. And if you were an apt student, you probably thought, well, where do we enter? How do we even use market structure if we have to wait for the next swing low to be formed before we can confirm the swing high to be formed? And if that's what you thought, that's super awesome. I'm super happy to hear that. And if you didn't, that's kind of an advanced thought, so don't stress it. Essentially, what we're going to be looking at here is the initial way to start anticipating where that market structure high is going to form in a downtrend. And that's essentially where you're trying to take your trade. So just so you can see how I would internalize this price while it's playing out, I'm going to use this replay tool, and we're just going to go back to this point here so we can kind of walk through it together here. So this was our initial shift in structure, which will be the next video. We're going to talk about market structure shifts. But we can see we've made this market structure high, and we've now made this swing low here. So on this candle's close, we've made the swing low. And at this point, we're looking to get short. We're looking to target lower prices above this 50% mark or in a premium. So we're looking to get short above this, and there is actually a fair value gap in here. Now, I'm not going to mark out all the PD arrays. This is maybe the one and only that I'll mark out in this video because I don't want to confuse you guys. But essentially, this is considered confluence and a good area to short. But as we can see here, price comes up here a little bit, taps into that fair value gap and into a premium just by a little bit. I'll zoom in so you can see we are above that 50% mark there before price continues lower, makes an equal low or relative equal lows. So adding liquidity to that low, coming back up into that fair value gap and into a premium, giving you another opportunity to get short and then ultimately selling off hard there. Now we're going to look for a new swing low to be formed, which is on this candle here. So we're going to go from our new market structure high down to this market structure low, and we're looking to get short above this 50% mark. Our best short opportunities are going to be in a premium, so somewhere up here, and we're looking to target this low and potentially lower prices down to here. So we're going to expect price to pull up into this, but we're not going to trade long. We're just trying to trade the trend in this example, so we are only interested in taking short opportunities or selling the market in this area here. So if price never comes up there, we don't have a trade. So price does come up there, and now we're ready to take a trade. It does actually reject this order block here so far. Now, like I said, I'm not going to cover that too much, but we do end up, okay, there you go, selling off and taking out this low. and ultimately creating another market structure high here, down to this market structure low. Price pulls up back into a premium here, so you could look to short this market in a premium, and ultimately we continue the trend, taking out this low and forming a new market structure high right here. This is your swing low, and it's not confirmed yet, but you're just looking, like I said, you're not trying to take longs against the trend here. You're just looking to take short opportunities above this blue line or above the 50% mark here. So even though this was a swing low and we've continued lower, you haven't lost anything. So we end up continuing lower and ultimately creating this new swing low here. So the same rules apply. You're looking to get short above this 50% mark here. And we come up here into a premium before rejecting and coming lower. So you're looking for short opportunities or entry opportunities above that blue line. We now have made a new low, so we're going to delete this and continue the trend. We continue lower, making a swing low here. We're going to mark out that high in this low, and we're not looking to fade the trend or go against the trend here. So we continue to make another low here. We're just going to drag this down lower here. And ultimately we end up breaking that low. So this has been denied, and we never actually got our short opportunity. So this is no trade because you were only interested in getting short above this 50% mark. Okay, so your stop could have been anywhere in here, but essentially you were only interested in taking a short position or targeting lower prices above this blue line here, which never came because we have now made a new swing or a new low, and we continue to make new lows here. We made a new swing low. I'll just mark this out because this is your market structure high and you're waiting for lower prices. And there it is. After sweeping this low, you would no longer expect the trend to continue, so you wouldn't necessarily want to be shorting here, but that's a more advanced topic, and we will be covering all of that logic when we go over liquidity. The important thing that I want to drive home here is this is the only area you're looking to go short. So anything below this doesn't matter to you. You just want to be able to look for short opportunities or ways to get involved in the market targeting lower prices in a premium. And you're looking for price to go from a premium to a discount. Premium to a discount. So we went from a discount into a premium, back to a discount, into a premium, back to a discount, into a premium, back to a discount, into a premium, back to a discount. I hope that's starting to make some sense. It might be a little bit repetitive, but I really want to drive that point home. That should be your first anticipation and realistically your first area of interest. So anything above the 50% mark or anything in a premium should be where you are looking to take your entries on a short position. Now we're not going to get into exactly where you want to take those short positions yet because that's where those PD arrays come into play, but that's where you're anticipating price to reject from, is anywhere above that 50% mark. So I hope you guys found that useful here. We will go over a bullish example quickly as well. So without further ado, let's hop right into that. Okay, so here we are actually on ES this time. So this is the ES or the S&P 500 futures chart on the hourly time frame, just to give us a little bit of a different look here, show you that it's not just on NQ 4-hour time frame that this is going to work. This is a theory that works on all time frames and on all asset classes. So we're just going to use this run up here. We're going to use the same thing that we did last time. I'm just going to use the replay tool here to go back so I can narrate it out loud and you can kind of see how I'm thinking this through. Okay, so we just had this shift in structure. I know that doesn't mean anything to you yet, but we will get into that next video. So these change in trends should really start to make sense to you. But essentially the important thing we have to note here is we're going to start a bullish trend now after we took out this high. So this is our market structure low and this is our market structure high. Okay, right here. So we did end up pulling into a discount here, into this fair value gap, probably this order block here. And let's see, we end up continuing higher and taking out that high. So we went from premium to discount. You could have taken a long in a discount looking for this high, maybe these highs over here that I have marked out as well. And we're going to take this market structure low here and think that maybe this is the swing high we'll have to see. And it is a swing high here, so we're expecting price to come back down into either this fair value gap on this candle here. But personally at that point, I would just like to see price revisit this opening price here of this down close candle, which is actually an order block. So we could take a long opportunity here, target this high here, these relative equal highs, target this high, maybe this high up here as well. And your stop could be pretty tight in comparison with a stop below the low for 18 handles. You're looking for a 5-to-1 risk to reward trade. So let's just see what happens here. We end up coming into this fair value gap, into the order block here, but most importantly, for this lesson, we come back into a discount. So in this green area is our discount area. So we're looking for long opportunities or reasons to buy this stock or asset. And we do end up pushing up above this swing high, which means that we could have had our first partial, or maybe you're all out of the trade at that point. But essentially this means that the trend is likely to still continue. So we're going to take our GAN box one more time, go to this low, wait for a new swing high to form. Still no swing high yet. Okay, so this is actually our swing high here, and this candle has pulled back into, for example, this fair value gap right here, as well as in this fair value gap from this candle's high to this candle's low. This will all start to make sense once you understand PD arrays a little bit better, but essentially this could be your long opportunity inside of a discount, looking for this high and these highs one more time. Let's see what price does. We end up bouncing from discount, moving back into a premium and making a new high. So we take our GAN box one more time. We go from this low to wherever the next swing high is. And we pretty much nailed that one. Just a lucky guess. But we do end up making our swing high there. So we're expecting price to come back into the range and into a discount here. And if it doesn't, then we're not worried about it because that's all we're looking for at this time. So price does come back into a discount here just a little bit so far. So maybe you take a long right off of that. I would probably look at this 9 o'clock candle here and use it as an order block, which actually looks like it might have been hit. Maybe it wasn't. I don't know. But the important thing, like I said, is we get into a discount here, and then we push back up into a premium, making a new high. And then we actually keep going like crazy here. So this would be your swing low now, and you're looking for a new swing high. And we engineer some liquidity at this swing high up here. So we really want to see this price ran through. Looking at this fair value gap here at equilibrium, and ideally you want this below premium or below equilibrium. You want it in a discount here, and maybe even this fair value gap here, but I would probably be looking at this fair value gap right here. So price does end up coming into this fair value gap, actually taking out this high and taking out this high over here, but it does not enter a discount. So using just the premium and discount theory, let me just key this to the right high there, make it a little more accurate so we're all on the same page. It's this high here. Like you can see here, we don't actually get into a discount, so you potentially had no long entry if you just trust the premium and discount rules, and that's one of the rules that you implement in your own trading strategy. Now, premium and discount isn't going to work all the time. Okay, nothing works 100% of the time, and there are always higher time frame things going on. So for example, if we go back to the 4 hour, just because that's the next nice time frame here, you could see that this was our range. Or let's do the daily. Let's go to the daily because we haven't done that before. So from this swing high to this swing low, we would have been pulling back into a premium. So all of this time we were pulling back into a premium, and now we've shifted structure on the daily. So we would be looking for a new daily swing high to pull back into a premium. Now this is called price and time being fractal. Okay, now that's really a complex thing to go over, so I'm not going to go over it in this video. That will be probably much more in the future, but it will totally change the way that you understand charts and analyze them. What I am trying to say is if we go from this swing low to this swing high here, you can see we never come back into a discount here. We end up pushing up higher. And then once again, if we go from this swing low up to this swing high here, we never come back into a discount. So there are going to be scenarios where you're not going to have your entries using a trend or a premium and discount model. Okay, there's going to be opportunities that you are going to miss, and you have to be okay with that, and then later you're going to have to understand when to recognize and, more importantly, anticipate those, and we will get into those types of things in the future. But for now, if you want to increase your win rate, which I think is the most important thing as a beginner trader because you need to build up that confidence, start implementing premium and discount into your trading model and watch how it changes the way that you trade. Now, I'm not going to go over anything else in this video, so I do hope you guys found that insightful and a little bit helpful. If you do have any questions, as always, make sure to let me know in the comment section down below, and I will do my best to answer those. And until next time.